So let's go over our favorite stock, what has happened today, because there are some very interesting things that are unfolding, especially in the bond market as well as in the energy markets. You are seeing some other companies as well, a lot of real estate companies that are announcing layoffs as of right now. We do know we have the Fed meeting tomorrow. We're going to get the Fed raising rates. It's expected, and the markets are pricing in 0.75%, and it's essentially a lose-lose scenario overall. There's no win for the markets. There's no win for the Fed that is coming after the Fed meeting. Now, we could see a relief rally to a certain degree, considering that the Nasdaq is down over 31% since the start of 2022. There is a case to be made. Potentially, you could see a rally, but there's no good news. There's nothing good that is going to come out from the Fed tomorrow, and I highly doubt we will see a big rally like we've seen in the past. We're probably going to get the Fed essentially admitting that they were wrong. There's not going to be a soft inflation. GDP is going to be very low, if not potentially negative, and we are going to go into a recession here in 2022. So we're going to dive into all of this key information. If you guys find value out of the video, hit the like button, subscribe to the channel, source those comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. Now let's get into it. So first and foremost, the thing that I really want to point out is what is going on in the bond markets today. The bond markets across the world are essentially getting destroyed. The dollar value of bonds are going down, meaning the yields are going up. And as you guys can see right here, 3 minutes ago, the 10-year treasury yield tops 3.45%, the highest in 11 years. And that's why you're seeing the prices of, or I shouldn't say prices, which prices of real estate are kind of still going up in some places, but the cost of acquiring a mortgage or getting a new house is going through the roof as well because of these bond yields. And this is really anticipation of the Fed meeting coming tomorrow and what the Fed policy is going to look like heading into the future. It's widely expected we're going to get a 75 basis point rate hike tomorrow because that's what the markets are pricing in. And over the last 40 or 50 years now, the Fed has almost always done what the markets have priced in, and the markets have now priced in 75 basis points instead of a half-point rate hike because of the CPI report we got on Friday, which did show inflation did not peak out. And that leads me into why the markets are potentially just going to sell everything off coming tomorrow, because the Fed puts out their summary of economic projections. So what they expect GDP to be, unemployment rates, what they expect a couple other things to be as well. I think the most important thing is going to be the GDP forecast, because we got this last economic projection back in March, and the situation has changed a lot. Back in March, the Fed estimated we would see 2.8% GDP growth for 2022, and we just seen a negative quarter print of GDP of 1.5%, which basically throws their projections out the window. It's saying, hey, the Fed is wrong. If the Fed does not essentially say, hey, we expect GDP to be less than 1%, we expect a recession, the markets are going to say, hey, the Fed is disconnected from reality. They don't understand what is going on, and we basically cannot trust the Fed. At the same time, if they come out and say, hey, we expect GDP to be plus or minus 0.5% for 2022, something that is reasonable, something that the markets are already expecting, the markets might say, hey, this is not good. The Fed expects us to go into a recession. At the same time, the terminal rate expectations are going much higher. And the terminal rate is essentially where the Fed wants to get interest rates and where they're essentially going to stop raising interest rates, where their end rate is projected to be. And 39% of market participants expect that terminal rate to be 4.25%. or in between 4.25% and 4.5%. So substantially higher than where we are currently at, and that's forecasting out to July 26th, 2023. So we're going to be faced with this scenario that the markets really have not priced in, and that is going into recession as the Fed continues to raise rates to get inflation down. And I've said this a couple times, we've never been in a situation where the personal savings rate has been so low, inflation has been so high, we're going into recession, and the federal funds rate has been so low. We have never, ever had that in the history of the stock market. So it's a really bad situation, a recession at all. But if you have a recession and the federal funds rate is low, aka the Fed cannot accommodate the markets, and inflation is high, that's like the worst setup that you could see being a Fed member or an investor at all. It's like the worst case scenario, the last thing that you want to see. Now, we also do have retail sales. They come out 7:30 in the morning tomorrow, and that's going to be a little bit of the pregame for the Fed. That's going to come out. It's actually 8:30 in the morning because I don't know why this is on Central Time, so it's 8:30 a.m. Eastern Standard Time. And then the Fed interest rate decision and the FOMC economic projections comes out at 2 p.m. And then 2:30 p.m. you do have the Fed press conference. Now, keep in mind what happened the last time around with the Fed interest rate decision. Essentially, the markets went down about 1% based off of the Fed actually raising rates at 2 p.m. And then Fed Jerome Powell actually came out, started talking throughout the probability of a 75 basis point rate hike. The markets ended up closing 3% positive by the end of the day. In 1.5 hours, the markets went up like 4%. It was absolutely wild. And then the next day, the NASDAQ dropped almost 6%. So I wouldn't make any conclusions, especially around 2 p.m., what's going to happen with the markets. But after the Fed, you might get a little bit of a sense of direction. And if you guys are a little bit confused tomorrow at 2:30 p.m. after the Fed talks, I will break down what they said and essentially try to figure out what's going to happen, right? Because last time around, I was very surprised the markets bounced so hard because of a couple key things the Fed said, like a soft-ish landing. The Fed essentially last Fed meeting said, hey, we're probably going to see a recession. We're not going to see this soft landing that everybody is hoping for. So that was really something that threw me off, and that really led me to buy some puts after the Fed meeting, and those did hit very nicely. Obviously, the next day with the NASDAQ dropping 6%, wouldn't expect anything less. Now, there is that. The bond market, the yields are going parabolic, and this is putting a lot of pressure on a lot of your growth stocks that will eventually have to borrow money into the future because, hey, the 10-year treasuries go up. That makes the cost of borrowing money very, very expensive. And those are the main things that are actually happening today. The overall bond market around the world is essentially going crazy. The bond yields in Europe, the bond yields in China, bond yields in Russia, bond yields everywhere are going through the roof. So it's not a good thing. It's definitely not a good thing. Just overall what is happening. The era of low or cheap money, I should say, low borrowing cost is gone. The biggest thing the markets are going to pay attention to, though, I will say it multiple times if I have to, but it's the probability of going into recession and the Fed continuing to raise rates as we are in a recession. Now let's talk about our favorite stock, which is obviously Sofi here on this channel, and why Sofi stock is up about 5% today. And here is this interesting article. It says Sofi, CEO buying, encouraging CFO commentary, and a possible reverse split. The summary, Sofi CEO Anthony Noto continues to purchase shares and has made 15 insider buys in 2022. I believe the news of a reverse split has been misunderstood as the board can choose not to go forward with a reverse split. Sofi's CFO presented at the Piper Sandler conference, and his commentary was very bullish, especially since he's seen top-line growth for decades, and since he sees top-line growth for decades to come. I believe shares of Sofi can generate 10.5 to 17.86x returns by the fiscal year of 2030, which would obviously be incredible. It would take $5,000 to $50,000 or $10,000 to $100,000. So there's that, and that's really why the stock is up today. Obviously, Anthony Noto and the insider buying is obviously a huge deal, especially in this market environment. There's a lot of reasons why people sell stock. There's only one reason why people buy stock, especially board members that usually get granted stock, and that is because they think it's undervalued and they think the stock is going to go much higher. Anthony Noto, as of yesterday, bought another 46.5 thousand shares. Harvey Schwartz as well, a director, he did buy 53,500 shares. Collectively, that's about $500,000 of shares that were just bought over the last 2 days. or even yesterday from the insiders. So there is a lot of good things going for SoFi in that regard. It's one of the best things to see, insider buying of their companies. Now, the current short interest of free float is 16.5%. 120 million shares are sold short. Cost to borrow max of 4.14%. 100% utilization. The free float out on loan sitting at about 24.5%. Now, I will say, heading into the Fed meeting, the biggest thing to pay attention to are the bond yields again, because fintech and the Fed, I like to say that all the time to remind people. But essentially, it's very, very important, because the higher these bond yields go, essentially, the more demand destruction you're going to see for lending products. And I ultimately think SoFi stock will really balloon and go much higher in the actual share price once student loans are actually out of forbearance. Once people have to start paying on student loans, I think there's going to be a big demand for student loan refinancing, and I think that is where SoFi stock will actually shine. Now let's go ahead and take a look at SoFi on a technical basis. We're sitting at $5.90 per share. You want to watch $5 for the potential downside, and obviously around $7 for the potential upside. We have had a lot of trouble in the past breaking out above the 50-day moving average, currently at $6.94 per share. If we get a bullish reaction off the Fed, SoFi stock is primed to benefit from that, and I would imagine they would benefit a lot from that. Now, the RSI, the relative strength index, is through the toilets at 39.03, extremely oversold and negative overall. The MACD is extremely bearish as well. So if you guys can't tell, I am extremely bullish on SoFi stock, and I think everyone really should be bullish on SoFi stock, especially at $5-6 per share. So that is going to be all for this video. Hit that like button, subscribe to the channel, source those comments, questions, or concerns down below in the comment section. Make sure to get your free stock with Webull, Moomoo, and Public as well. Thank you guys for watching, and I will see you in the next one.